Markets today with today's data download. Stocks extending losses into a second session with all three major indices closing in the red. 8 of 10 S&P sectors ending the trading day lower. Telecom and industrials were today's worst performing sectors, while healthcare and materials posted gains. The big winner in the precious metal pits, platinum jumping 1.7% to settle above $1,580 an ounce. Gold also rising, ending in the green today, closing up 1% to snap a three-session losing streak. U.S. small business, meantime, owner confidence increasing just slightly, almost flat in December, but remaining at the record low levels. The National Federation of Independent Businesses reporting its index rose 0.5 point to 88. The survey blaming uncertainty surrounding the fiscal cliff negotiations as a drag on sentiment last month.
All right, and let's get straight to today's action with Larry Shover, Chief Investment Officer at SFG Alternatives. Larry, we are waiting on earnings from the aluminum maker Alcoa. It's a Dow component. This is really the unofficial kickoff to fourth quarter earnings season. I want to remind everybody that the average estimate right now heading into that is 6 cents a share on revenues of $5.6 billion. We'll cut in when we have that. But Larry, looking at these markets today, another down day. What is this telling us after the rally to start the year last week and then the sell-off this week? Are we sort of facing the reality that is the debt crisis in this country? What are you focused on?
Well, right now I'm focused on digestion and consolidation. I mean, we had a big run-up January the 2nd, and right now this really isn't a sell-off at all. It's more just consolidating and digesting. People are just desperate looking for the next catalyst. It seems like nobody's talking about Europe or China. Even the fiscal cliff is in the rearview mirror. Nobody seems to know what's next, and we'll see what happens. As you said, we have earnings starting tonight. Maybe that will be the next catalyst that will drive the markets.
All right, Larry, and also, by the way, we are hearing that we are going to be getting Alcoa's numbers out here. I see that the numbers are starting to hit the wires. I am seeing at first glimpse sales of $5.9 billion, so revenues do appear to be beating the street estimates. Now, Larry, at first sight, the revenue number looking pretty good. Is this something that you were looking for? This is a Dow component again.
Yeah, you know, I was wrong. I mean, I think revenue is a lot more important than earnings per share right now, simply because...
Larry, let's interrupt you. I'm sorry, if we can just interrupt you. Let's go to Adam Shapiro, who has all the EPS and revenue numbers. What do you have, Adam, on Alcoa?
It's a hit and a beat. On the earnings per share, it's coming in at 6 cents, excluding items. On revenue, the street was expecting $5.6 billion, coming in at $5.9 billion. And they do acknowledge the low aluminum prices, but they're talking about being in a strong cash position. The company delivered $1.3 billion in productivity and overhead improvements. They're kind of crowing here about having $1.9 billion cash on hand. Back to you.
All right, Adam, thank you. So, Larry, sorry to interrupt, but there we have it. The EPS, well, it matches estimates at 6 cents, and but as Sandra mentioned, a beat on the revenue, $5.9 billion. Obviously, we need to dig into this more, get more on their guidance. They seem to be happy with having a lot of cash on hand. What's your first thought?
Yeah, my first thought is I think the market's wrong, including me, because revenue is a lot more important. 65% of their business is downstream. It depends on engineered products, and et cetera, et cetera. People are writing off Russia and the China growth, saying this was not going to be good for Alcoa. Most people thought they would beat earnings per share but miss on revenue. Options markets were implying about a 40-cent move. I don't know what the stock's doing right now, but it seems like I'm wrong and the market's wrong. We must be higher.
You know, and something I want to point out is the global aluminum demand. The company's forecasting it to be up 7%, Larry, in 2013. That's a big turnaround from the very weak demand that we've seen. Remember, these aluminum goes into cars, soda cans. It's a really good indication of the economy. Looks like they're pointing to an improvement in the economy.
Yeah, it seems like they're implying 6 to 7% demand growth, as you said. What's more important to look at, though, is supplies are even higher. And beyond that, supply growth is really strong because aluminum's still not trading near its cost curve. So what's going to happen is we're going to still see an utmost production of aluminum. It's going to create a bigger supplies. It's going to take longer and longer for it to destock. So in short, aluminum prices are going to stay stagnant for the next 3 to 6 months, and that's going to weigh heavily on the stock of Alcoa.
And Larry, we're looking at the bid ask here, and after hours up to 9.26, up about 16 cents on the bid. Do you see a lot of movement to the upside on Alcoa when it opens tomorrow?
Probably so. I mean, given that the options market was implying about a 40-cent move, It seems like a little bit more upside. I still would be a seller of that right now. I think it's a little bit rich given the price of aluminum is going to stay low, but I do think a little bit more upward momentum is in order for tomorrow morning.
All right, Larry Shover, thanks for joining us from the CME. We'll get back to you when the S&P 500 futures close in just a few minutes. And by the way, maybe